Welcome into Kicking the Rear podcast, episode 12. My name is Joe Yarshin. Today we're going to be reviewing Start Your Own Corporation. It's Why the Rich Own Their Own Companies and Everyone Else Works for Them by Garrett Sutton Esq. So he is a rich dad advisor. Robert Kiyosaki has a whole list of book series. And as promised, following last week's episode, Ken McElroy's book. This is the book on starting your own corporation. It's a business book. It's going to help you with real estate. It's going to help you with real estate investing. It's chock full of useful tax information, a lot of boring information to the average investor, but it's very critical for taxation and business practices, liability, and so many other things. So without further ado, let's get into it. Starting off in Chapter 1, Your Entity Menu, he discusses C Corp, S Corp, LLCs, limited partnerships, general partnerships, and sole proprietorships, kind of the breakdown of what all of these are. He states that the bad entities you want to avoid are sole proprietorships and general partnerships to start. He gives practical examples and cases using personalized business plans to kind of illustrate the concepts within these structures of entities. So other than sole proprietorship disadvantages, he goes into so many other reasons why they're not good and why they can put you on the bad end of a lawsuit. So at the end of the chapter, he says, the longer you operate as a sole proprietorship or general partnership, the longer you're going to be personally responsible for every bad thing that can happen in your business. If you're currently operating as a sole prop or general partnership, see a professional. Visit corporatedirect.com about switching to a good entity. That's his website. It's as advertised. That's what they specialize in. So that's kind of his bread and butter. If you're considering getting into a business, do not start out on the wrong foot by using a bad entity as described in this chapter. Chapter 2, he describes what good entities are. So C corporations, S corporations, limited liability companies, and limited partnerships. Again, gives examples of each kind and what the language of the good entities are. So, for example, like in corporation, you have the owner's a shareholder, and senior management, you have a CEO or a president. You have organizational documents like the articles of incorporation, or in an LLC organization, like I discussed last week. And then the operational roadmap would be like the bylaws or the operating agreement if it's a limited liability. Then he discusses if you think you may want to go public at some point in the future with the business, but you want initial losses to flow through, consider starting with an S Corp or limited liability corporation, or limited liability company, rather. I'm sorry. You can always convert to a C Corp at a later date after you've taken advantage of flowing through losses. Again, he gives case examples of how to do this. California residents, for example, must be cautious when considering the use of an LLC. They're very high in fee structure. So in addition to the annual LLC franchise fee of $800, state of California hits LLCs with a fee based on their gross receipts. This fee has nothing to do with whether your company is profitable or not. So it's only based on revenue generated. So you can lose money and still owe a fee. It's important to pick which state you operate in. On gross income of $250,000 to $490,999, the fee's $900. Fee gradually rises to $11,790 on gross income over $5 million. So very technical, but that's for specifically the state of California. Some of these tips you don't need to memorize because he just recommends you utilize his corporation to help you with those decisions if you're a business owner. Entities are good when they are legally separate from their owners. So corporations, LLCs, LPs, which is limited partnerships, require filing with the state government to obtain the separate identity. Sole props and general partnerships are bad because no such filing is required, and thus there's no separateness to protect you when things inevitably go wrong. In Chapter 3, he reviews the difference between corporation or an LLC, the advantages and disadvantages of each, depending on what you need. So he kind of talks about the likes and dislikes of C Corp, S Corp, and LLCs. And then like payroll taxes and business debts, things of that nature. And then toward the end of the chapter, he says to reference chapter 4 for more information on this concept. In the conclusion, he says you have a better understanding of which entities to use for that specific use. And then he actually gives you a discount on his services if you mention this book. So it's kind of a cool discount. Chapter 4, using Nevada and Wyoming entities to your maximum advantage. So there are some tax benefits and cost savings to using a Nevada or Wyoming entity. And he goes into the exact specifics of those. So he also discusses doing business in your own state as one strategy versus doing business in your state and in Wyoming. Thought this was really interesting just to free up some of the costs associated with doing business. And then chapter 5, how a charging order works to your advantage. So some of this material is a little dry, but the good thing is with these case numbers he puts in here, he kind of gives real world examples of business owners that have gone through it and their kind of pitfalls and the good things that came out of it as well. Insurance is your first line of defense. So he discusses the importance of umbrella insurance, which is really great. He says to organize in states that provide single member charging order protection, keep the operating entities, the ones that deal with the public, away from the asset owning entities, and consider having the operating entities hold fewer assets and least expensive assets from the asset owning entities. So in chapter 6, then crossing state lines starts off with a case number and explaining some of the operational organization of the LLC and the land trusts and how that kind of enters the liability space. He says holding banker securities accounts and appearing in court mediations, arbitrations on your company's behalf. He says that land trusts are not registered with the state. So as such, there's no legal separateness and thus no asset protection. He says to appreciate the difference between the attack number 1, which is a tenant example he uses, and attack number 2, a car wreck example. Kind of have to read to understand that one, but he says to consider using Wyoming and Nevada LLCs to hold and own your in-state LLCs to gain better protection against those types of attacks. And then be leery of promoters offering elaborate, questionable privacy strategies. Structure trumps stealth in the court of law. In chapter 11, he reviews the benefit of corporations. And there's a lot of them, and there's a lot of income provisions. And in chapter 8, he discusses professional corporations. If your profession requires special licensing, you may be only able to operate as a professional corporation. So check with your advisor. Professional corporations do not protect against claims of malpractice. For protection, your outside assets, real estate brokerage accounts, etc., should be placed in separate protective entities. So then he tries to explain how to explore how to set up a good entity. So in chapter 9, organizational steps for forming a corporation, an LLC, or a limited partnership. What you're going to need for the corporations are your articles of incorporation. You'll need to select a corporate name, purposes and powers, selecting a board of directors, authorized capital, duration, how long it lasts, and then the name and address of the resident agent, including your bylaws. You have to have meeting of directors, meeting of shareholders, officers and directors, records and reports. So a lot that goes into the structure of that, but then LLCs have something similar. You have your articles of incorporation. You have to pick a name, purpose and powers, name of the agents. Is it going to be manager or member managed? So usually the decision's got to be stated in the articles of organization. When I set up business accounts in the retail banking space, we had to review these documents for accuracy and to accurately put the owner's titles on the business account for each person that was on the operating agreement as well. So there's managers, transfer of interest, just so many things. I'll kind of let you get into it if you're going to read this one, but it's on page 118 and 119. It's really good information. He says that trademarks are very important to a business. So while you may be able to perform or form an entity under a certain name, if that name had been previously trademarked, you might not be able to use it in your business. So, yeah, kind of an interesting fact there. He says that the fact that each state requires that a corporation, LLC, or LP have a resident agent in that state underlines the importance of choosing a reliable agent. Do not have the same mom and pop resident agent service perform this function. This may not be around a year from now, so in such a case, you could be sued, never receive a notice to defend yourself, and have a default judgment entered against your company, meaning you'll have lost the lawsuit potentially. So he says that it's very important to get a reputable company to handle your affairs. In chapter 10, he reviews the importance of corporate formalities. Again, kind of dry stuff here, but it's just very, it's extremely important in your business formation. So it's important, he says, to keep your minutes of operation in a safe place. Obviously, losing or misplacing them doesn't fit into your protection strategy. So corporate minute books are binders for holding up your meeting minutes, as well as articles, bylaws, and other corporate docs. Usually costs about $75. And if they basically force you to be organized. And he says it's money well spent. So chapter 11, he discusses business tax deductions. I think this was my favorite chapter. As an LLC owner, you have your startup expenses, your operating expenses, inventory, capital expenses. So cars, equipment, office furniture, other assets that have useful life over 1 year considered capital assets. You'll have to work with an advisor, he says, to appropriately establish the depreciation schedules. So section 179 deductions for small business owners. He says you can go to his corporate direct website for some of these examples. Office rent expenses. So you can rent out your office and expense that as well. A lot of people don't know that. You can do, it's a certain limitation to it though, he says. So you kind of have to check with your professional to get the exact parameters. So meals, startup expenses, computer expense. I thought that was really cool. You could buy a computer for your business and expense, telephone, phone expense, employees, automotive allowances. So your maintenance, sometimes car washes, things like that, travel expenses, health insurance. You can do group term life insurance, dependent care, cafeteria plan. So you can kind of customize some of these things, education dues and subscriptions if they're, as a business need, retirement plans. That's an obvious one. You have a lot of employees, but he says to fully maximize your corporation, LLC or LP, and the available deductions it offers, considering adding a good accountant to your team. Might want to consider going to the IRS website, obtaining publication 334 tax guide for small businesses to give you all the deductions you can potentially take. So know that not everyone advocates the use of retirement plans due to the high and often hidden fees associated with them. So it says to do your due diligence on such plans. Chapter 12, building corporate credit. So this one's really cool too. He says an advantage of owning a corporation's ability to build a corporate credit rating separate from your personal credit. So properly established, a corporate credit rating will allow you to borrow in the business name rather than your own name, protect your personal credit score, maximize your business tax deductions, among other things like writing off losses, avoid personal guarantees, and of course, to grow the business, probably the most important thing. And to do this, you'll have to navigate through business credit reporting. Many agencies, he says, collecting and selling business credit reports, DNB, Experian, and then the Small Business Financial Exchange are the main ones. So he goes into how to do this, level 1, level 2, and then level 3, whenever possible, use business credit cards or loans rather than personal credit, even if you have to give a personal guarantee. He recommends getting a book called Finance Your Own Business. So that's really good tidbit there. And then in chapter 13, he reviews insurance as it applies to the structures. So liability insurance, real property and personal property insurance, replacement cost versus current value, health insurance, workers' comp, cyber liability insurance. Never heard of that before. Director and officer liability coverage. And then he says to never let an insurance agent advise you that you don't need a corporation or an LLC because they're commissioned salespeople, not asset protection attorneys. So insurance companies find reasons to deny coverage. Your properly formed corporation or LLC will never do that to you. So work only with an insurance professional you have enough confidence on. With your attorney, CPA, your banker, you got to work as a team with them. And then he discusses a little bit more about joint ventures in chapter 14 and some of the pitfalls of that. So as global businesses opportunities expand, joint ventures are on the increase. He says that Chinese, Indian, and other growth markets are more open to foreign local joint venture agreements. Chapter 15, he reviews raising money. So kind of like the business implications of raising money through an LLC, a limited partnership, corporations, a lot of legal ramifications there to understand. And it was a very lengthy chapter. I didn't quite grasp every concept in this, to be honest, but I thought it was I thought it was something interesting to at least have an understanding of. So something I might need to reread in the future because it was a little lofty for the first time reading it. But he says to consider using a Rule 506 or a Reg D offering for your private placement. You'll avoid burdensome state rules, under promise, over deliver. That'll keep your investors happy, securities regulators from your doorstep. I don't have to deal with this because I don't have that big of a company or anything like that, but just good to know. Crowdfunding brings promise but requires caution. And he goes into, in chapter 16, voting trusts. It's kind of more complicated than a lot of people would need to start out with, but some important tips from that chapter. It's important to talk to potential shareholders about voting trusts ahead of time. The trustee has a fiduciary duty to the voting trust shareholders. Stock is voted according to the trustee's judgment. Chapter 17, know who your directors and officers are. So what are directors and officers and what powers do they have? So as a quick background, he says directors are individual persons appointed by the company's shareholders on a yearly basis at the annual shareholder meeting. These officers are positions such as president, secretary, treasurer, vice president, CFO, CEO, COO. So you probably have heard of that. He says if you're going to run your own corporation, you don't need to fill in all the positions necessarily, but in Nevada and Wyoming, for example, one person can be the president, secretary, treasurer, and sole director. So another benefit of doing the business entity in that state. Even if it's just you running the company, you need to be mindful and follow all the duties listed below. So he discusses what those are: fiduciary duty and indemnification, duty of care, duty of loyalty, which directors can be liable, directors and officer liability insurance. So just a lot of boring jargon in there, but still awesome stuff to be aware of. Chapter 18, how to use a buy-sell agreement. Always have the terms of a buy-sell agreement reviewed by your own independent attorney. He says that remember that the corporation's attorney represents the company, not you as an individual. Short chapter there, but chapter 19, he discusses protecting you and your business from scams. So I think this is another very important chapter for people just starting out, but keep your guard up, engage in critical thinking when reviewing or hearing a smooth pitch. Don't be swayed by glowing testimonials of fancy brochures. In chapter 20, Garrett says what happens at the end. So limited partnerships, when they come to a close, LLCs, when they come to a close, corporations, why dissolve companies. So considering the why and the goal with the company. And of course, it requires careful review and process. So chapter 21, the 7 steps to achieve limited liability. First, you must form a limited liability entity. You would need to use a reliable resident agent, perform required annual filings, prepare or have an advisor prepare minutes of meetings, put the world on notice of your entity. So telling everybody that you're operating as an limited liability. Maintain separate bank accounts for them, prepare or have an advisor prepare separate tax returns. So that's the conclusion of Start Your Own Corporation by Garrett Sutton and why the rich own their companies and everyone else works for them. I think this was this book was integral in understanding the purpose of LLCs and corporations, but also opens the mind up to other both positive and negative sides of the business. So just getting you to creatively think differently of structure and how you're going to create your business with the end in mind. So I know Bigger Pockets podcast, David Green and others discuss how that's so important, having the end in mind when you're starting a business. So I enjoyed this book. I think it was hard to read at times because of its potency in tax law and tax understanding, but it was still worth your time. I would highly recommend it. And I look forward to the next book. I think we're going to do another mindset book. So I'm excited for that. And I appreciate you tuning in. If you liked what you heard today, please like and subscribe. As always, bippity boppity investment property. Let's go.